Howdy, y'all. Welcome Liberty Call. Today is Wednesday, November 13th, 2024. Hope you're having a fantastical day out there in the interwebs. Pretty nice day here in Colorado. Lots of clear skies. It's, it's not too hot, not too cold. Well, I mean, for this time of year. So you can walk outside without needing to put on a coat. But anyway, still snow everywhere. And it is still quite slippery because the snow melts, turns into water. Then the water freezes overnight, and then you have a skating rink on your driveway. So fun times. All right. Well, before we jump into the markets for today, if you could do me a favor, give me some thumbs up, a like, a share, subscribe, a follow, and press that notification bell. All righty. Nose is running today. All righty. Let's hop into the markets. Dow Jones was up 0.11%. 47 points, closed at 43,958. S&P 500 up 0.05, only 3 points, closed at 5986. NASDAQ down 0.23%, 45 points, closed at 19,236. The VIX was down 4.69% today. It's currently holding at 1402. Canada up 0.26, Brazil up 0.13, and Mexico down 0.49. Let's go over to Europe. Germany was down 0.3%. The UK up 0.06. France down 0.14. The Netherlands down 0.26. Spain down 0.05. Italy up 0.3. Switzerland down 0.2. And Portugal down 0.6. Russian exchanges were split today. The MOEX up 0.35. RTSI down 0.07. And the overnight markets, the Nikkei in Japan was Nikkei was down 1.55%. Australia down 0.75%. New Zealand down 0.29. In China, the Shanghai was up 0.51. The Shenzhen Component up 0.4. China A50 up 0.71. DJ Shanghai up 0.36. Hang Seng down 0.12. And the Taiwan weighted down 0.53% for the day. All right, so those are the markets. Y'all feel better today? I don't. I mean, there's still all the same problems that we had weeks ago and months ago and years ago that no one in Washington or the Fed or anyone who has any real control over things actually gives a damn about. But anyways, is what it is. All righty, well, let's get into the market recap. U.S. stocks rise after inline inflation data firm up December rate cut bets. Yeah, but he just wants those rates to go down. All righty. U.S. stocks rose Wednesday, fueled by optimism that the Federal Reserve is likely to implement another rate cut in December following inflation data that aligned with expectations. This comes a day after markets retreated from record highs due to profit taking. The October Consumer Price Index report showed a 2.6% annualized increase in headline inflation, up slightly from September's 2.4%. Monthly inflation held steady at 0.2%. Core CPI, which excludes volatile food and energy prices, rose 3.3% year on year and 0.3% month over month, mirroring September's figures. The data eased market concerns, especially after Minneapolis Fed President Neil Kashkari's earlier comments suggesting inflation surprises could stall further rate cuts. I mean, it did tick up. I mean, anyways. Let's see here. Following the report, the probability of a 25 basis point rate cut in December surged to 90% from 60% the previous day. Several companies posted notable movements on Wednesday. Rivian Automotive surged 18% after announcing an expanded joint venture with Volkswagen, which pledged up to $5.8 billion in investments by 2027 to support Rivian's R2 model ramp-up and production capabilities. If I could pause here, those Rivian trucks are the ugliest things I've ever seen on the road. They're kind of like they look like the ugly stepbrother of the, that Toyota FJ Cruiser or whatever. It just, I mean, I know it's electric and there's weirdos out there who think that's important, but I mean, you got to have some style in what you're driving. I mean, I know cars and trucks and stuff are functional or, have functional properties, but if they're just ugly, kind of like the Studebakers back in the 50s, I mean, shit, pardon my French. All right, next up, Spotify Technology gained 11% on strong subscriber growth and an optimistic year-end forecast. Cava Group climbed nearly 7% following strong third quarter earnings beats. And let's see here, Skyworks Solutions fell over 4% after issuing softer than expected guidance for the next quarter. Let's see here. Bitcoin extended its post-election rally, climbing 6% to 92,285 after briefly surpassing 93,000. Market sentiment has been buoyed by expectations that a second Trump administration could favor cryptocurrency policies. The CPI data, coupled with corporate earnings and the Bitcoin surge, shaped a bullish outlook for the markets as investors anticipate further monetary easing and continued economic growth. Well, if you say so. All right, let's get to some data here. October CPI numbers comes from First Trust. Mr. Nate Guernsey is who put this report together. All right. Inflation in October aligned with expectations, but remains above the Federal Reserve's 2% target, signaling ongoing challenges for policymakers. Headline prices rose 0.2% for the month, translating to a 3% annualized rate, while the year-over-year figure increased to 2.6%, marking its first rise in 6 months. Energy prices, which have helped temper inflation recently, were flat in October, but have dropped 4.9% over the past year. Excluding energy, inflation rose 3.2% year over year. Food prices also climbed 0.2% in October. Stripping out both food and energy, core inflation rose 0.3% for the month, 3.4% annualized, and remained at 3.3% year over year. A key contributor to core inflation continues to be housing rents, which rose 0.4% in October and show little signs of easing. Some analysts, including those at the Fed, argue that the way housing rents are measured may overstate inflation due to reporting lags. However, the supercore measure of inflation, which excludes food, energy, goods, and housing rents, also rose 0.3% for the month and 4.4% annually, up from 3.7% the prior year. Inflation has now exceeded the Fed's target for 44 consecutive months. While tighter monetary policy typically takes time to show its full effects, the Fed's recent rate cuts totaling 75 basis points since September may undermine efforts to sustainably bring inflation down. Despite some cooling, the October data underscore the inflationary pressures still persist, particularly in the housing and core categories, with no clear signs of a significant economic slowdown or recession. Reaching the Fed's 2% target consistently remains uncertain. This report highlights the difficulty balancing rate cuts and inflation control. Yep. Again, I would have kept raising rates, but Chairman Powell is a coward. So, well, most of those people who work in those big, cushy jobs in Washington are usually spineless wimps. So I think that's a prerequisite for being a federal employee. All right. Well, let's get to our next article here from Zero Hedge. OPEC Plus faces double trouble. China demand weakens and Trump's policies. All right. OPEC Plus is grappling with weaker than expected global oil demand and new uncertainties tied to President-elect Donald Trump's energy policies, which could require frequent adjustments to its production strategies. China's sluggish economic growth, property sector crisis, and rising adoption of electric vehicles have weakened its oil demand, disrupting OPEC Plus's supply management plans. The group's projections for China's crude consumption in 2024 have been repeatedly downgraded as actual data lags expectations. In October, China's crude imports fell for the sixth consecutive month compared to 2023, down 9% year over year and 2% from September of 2024. The International Energy Agency notes that China's transitions to EVs is a key factor behind slowing global oil demand. President-elect Trump's anticipated policies, including stricter sanctions on Iran and significant tariffs on imports, pose risks to global oil markets. Sanctions on Iran could tighten and boost supply if demand remains stable. However, proposed tariffs such as a 10% levy on all U.S. imports and a 60% on all Chinese goods could hinder global economic growth, potentially reducing oil demand by 500,000 barrels per day in 2025. This could soften oil prices by $5 to $7 per barrel, according to Wood Mackenzie. Who wouldn't want lower oil prices? I know I want them. Despite Trump's pro-energy stance, U.S. shale producers are unlikely to significantly increase output due to capital discipline and a focus on shareholder returns. Cost inflation from tariffs could further pressure production. Amid weak Chinese demand and geopolitical uncertainties under a Trump administration, OPEC Plus needs to revise its policies more frequently, straining its efforts to stabilize oil markets. Yeah, it's all Trump's fault. That makes more sense. All right, got one more article here for our crypto bugs out there. Also from Zero Hedge, Bitcoin tops 90,000. Where next? I know a lot of people are talking 100,000 million per coin. It'll happen at some point. I don't know if it's in my lifetime, but 100,000 doesn't seem far off. But a million per Bitcoin, seems a little out of reach at this point. But with the way our Federal Reserve handles things, who knows? Alrighty, Bitcoin broke past the significant 90,000 mark, rising over 32% since election night as market optimism surrounding pro-crypto policies under a second Trump administration fueled its rally. The cryptocurrency's record-breaking surge has been bolstered by strong institutional inflows into Bitcoin ETFs, favorable U.S. market conditions, and expectations to support regulatory changes. All right, so election momentum. Trump's re-election is perceived as a positive for cryptocurrencies due to his potential pro-crypto policies, sparking increased interest and investment in Bitcoin. Institutional investment, record inflows into the Bitcoin ETFs, and growing institutional interest have further supported the Bitcoin's momentum. And economic conditions, cooling interest rates, and a robust equity market performance have also contributed to Bitcoin's upward trajectory. Most analysts anticipate Bitcoin will reach or surpass 100,000 by the end of this year. Linux Lie projects Bitcoin beyond 100,000, but warns of macroeconomic uncertainties such as potential government spending cuts and geopolitical risks, which could impact market dynamics. Josh Gilbert of eToro emphasizes strong fundamentals and predicts Bitcoin will breach 100,000, though he foresees potential short-term pullbacks. And Guy Armani of HDI Fund envisions Bitcoin reaching 100,000 and possibly continuing the bull run into 2025, driven by global crypto adoption and supportive U.S. policies. Short-term volatility, analysts caution about potential corrections and heightened volatility due to record high open interest in Bitcoin futures and options, and also the psychological resistance at 100,000. Reaching and sustaining levels beyond 100,000 may face significant selling pressures. And so what's the outlook? While the consensus is bullish, with many expecting Bitcoin to maintain its upward momentum, analysts emphasize the need for caution given potential macroeconomic and market-specific risks. Yep, be careful out there, folks. All investments are dangerous. So you just have to know when to hold them and when to fold them. Alrighty. Well, that's everything that I had to share for today. If anyone needs anything from me, please go to DSAFinancialGroup.com. All your financial planning needs can be addressed there. So give me a buzz. I'll be happy to help. All right. Well, that's, like I said, everything that I had to talk about. So if anyone needs anything from me, please go to the website. Otherwise, have a fantastic evening. Me and my man Jake are going to go out here and have some more fun time this afternoon. And I hope you have a great evening too. Adios.